tragedy. And I think the Enron analogy is appropriate. There was a real underlying business here, and they were playing balance sheet games and tapping into customer funds. And over 1 million people have been impacted by this. Clearly, they were very cozy with government. Sam Bankman-Fried was the second largest donor to the Biden campaign in 2020 and the fifth largest donor in the midterm elections, and basically being the self-anointed individual to try and tell regulators what they should do. So clearly, they had very close relationships with regulators and candidates and elected officials.
An interview with the YouTube channel Fox Business, Brian Steele and the Bitcoin Foundation was discussing about the breakdown FTX founder Sam Bankman-Fried's donations about the Democratic Party on.
Yeah, absolutely. I mean, this is the trajectory we're on for sure. You know, we continue to expand the proof of reserves, as you noted. You know, we continue to expand the coverage across our balance sheet. It's, you know, a mechanism.
When can they expect that? Can they expect it for this year's audit?
For the end of this year, you know, I don't have like a specific timeline for you, unfortunately, but you definitely can expect it. You know, again, we've been in this space for a long time, for a decade now, and so we've, you know, continued to invest in security all throughout. And I mean, again, it's an approach that. As you know,
according to the YouTube channel CNBC Television's incoming Kraken CEO Tara Repo joins to the Tech Check to discuss customers impacted by the FTX downfall and status of the conditions. Kraken's commitment to the security and protecting client funds through proof of the results and the Bitcoin removing the needs from the trust third parties. Before we dive in the video, subscribe to the Bitcoin Thinking channels and turning on the red notifications button. And also tell me how's my today's glasses. So the collapse of FTX has dealt a catastrophic blow to the crypto's reputations as the aspiration. The fall from grace was hard and the first. Only a fortnight ago, Sam Bankman-Fried was in the stratosphere. FTX as a cryptocurrency exchange, then the third largest as was value at the $32 billion. His own wealth was estimated at the $16 billion. To the coachings and the ventures capitals of Silicon Valley, he was the financial genius who could wow investors while playing video games and destined and perhaps to become the world's first trillionaire. In Washington, he was the acceptable face of the crypto community with the lawmakers and the bank ruling efforts to influence its regulation. Today, there is nothing left but the one and furious creators, dozens of the shaky crypto firms, and proliferations of the regulatory and the criminal probes. The high-speed implosions of the FTX has dealt a catastrophic blow on industry with a history of the failure and the scandal. Never before is a crypto locked on the criminal, wasteful and useless. Totally wasteful and the useless. Who would have known that the few ill-timed bank runs would pull down the entire host of the cause by the providing that, while exchange appears to have a high revenue and the tons of the tokens on their books, many are completely unable to meet user withdrawals request. Crypto investors panic withdrew record amounts of the Bitcoin, Ethereum and the stablecoins from the exchange. Separate reporting cited a sharp uptick in hardware wallet sales as investors realized the importance of the self-custodying their portfolio. In the number of the insolvencies and the temporarily pausing of the deposit and the withdrawals, masses continue to pop up over the next few weeks. It seems like that is the trend of the coins leaving exchange and the popping into the hardware wallet will continue. Decentralized exchanges continue and the activity to DeFi occurring currently with a record outflow from exchange. After the events of the past weeks, trust in the decentralized exchange and the crypto companies could be the broken and the content. The next wave of the crypto investors could be impressed the more Web3 focused DX and the DeFi protocol. Currently, the Ethereum price seems to be the bit soft. A technical analysis standpoint and recent news about the FTX thief holding the 31st largest Ethereum spot position, plus concerns over the censorship centralizations, the United States Office of the Foreign Asset Control Enforcement on this will and other Ethereum-based protocol that have exposure or bankruptcy proximity to the FTX and Alameda could stir up a bit of the FUD that impacts the altcoin price actions. Uncertainty on when the Shanghai upgrade will be enacted and investors' concerns about when stacked coins are actually be the withdrawals are also interesting, and the conservations that could turn terms and the sentiment against Ethereum. The thesis is the pretty simple. The thesis is the pretty simple. Ethereum has held support around $1,200 to the $1,300 pretty well though all of the previous months of the bearish market development, but will be the potential challenges and mentions about lead to the test of the levels again. Stickers are essentially support longer in the earned yield, so this is a juncture and offering a low level short position with attacking a profit order to the $700, $600 that could possibly be rewarding. The Bitcoin is back at it again. The fall of the FTX cryptocurrency exchange has restricted these informist critics that are once again blaming a robbery on the money that was stolen and not the rob. For instance, Chetan Bhagat, a renowned author from India, wrote a detailed crypto obituary comparing the cryptocurrency sector to a communism that promised the decentralization bit ended up with perhaps unsurprisingly he called him a current release used a melting Bitcoin price tag down to the $16,000 logo as a future image. Bhagat should be have a picked and more accurate image for his op-ed. FTT tickers down the $1.48 token, particularly after looking at the Bitcoin decade plus history that has seen just surviving even a nationwide bans. This including 465, 466 obituaries since its debut in 2009 when it traded for a few cents. The FTX Alameda collapse is similar to the previous bearish trigger event like the MTGOX in the 2014. Therefore, this is a failure of the decentralization will once again underline that make Bitcoin special and why FTX is the opposite of the Bitcoin and decentralization. Traders responded to FTX's shocking collapse by the pulling their Bitcoin from a custodial exchange. Notably, the total amount of the Bitcoin held by all exchanges dropped to 2.07 million Bitcoin in the November 17 from 2.29 million Bitcoin at the beginning of the month. United States-based exchange saw the biggest outflows, in particular with a user withdrawing over $1.5 billion in Bitcoin in the past week alone. FTX founder Sam Bankman-Fried was a Democratic second biggest donor after the George Soros from the midterm election, giving nearly $45 million to the lobby for the crypto regulation that would be allegedly benefits for him. But speculations arise that Sam Bankman-Fried attempted to tarnish Bitcoin's growth through the United States lawmakers, as well as the new articles where he downplayed Bitcoin as an efficient payment system. Other commentators have also pointed out a connection between the Sam Bankman-Fried and anti-crypto U.S. Senator Elizabeth Warren, noting the former's father, Joseph Bankman, helped the politicians draft tax legislation in 2016. Sam Bankman-Fried's influence among U.S. lawmakers is now gone, with him facing potential criminal charges for allegedly using customer funds for the FTX traders. Past cryptocurrency market downturn his roots in the fear of the centralization prayer as well as altcoin that ultimately ended up being a money grab. FTX token FTT is just the latest example. Other failed projects that triggered a market down just this year include the DeFi lending platform Celsius Network and the Terra Luna ticket down $1.66. Therefore, a market crash of the altcoin that should not have ever existed. FTT include May 4th strengthen investors' trust in the Bitcoin. Early data is showing the same, with coin shares reporting in inflow uptake into a Bitcoin-based investment funds. Notably, Bitcoin-based investment vehicles attracted $18.8 million to their coffers to the week ending November 11, bringing its years-to-date inflows to the $316.50 million. The inflows began later in the week on the back of the extreme price weakness provided by the FTX Alameda collapse, not jams the battlefield height of the research as the coin share adding. Let's take a look on some tweets about that operation. Hi all, crypto is now dead. FTX, a cryptocurrency exchange, collapsed last week, providing a lot of the cool guys horribly wrong, McCormick the 3OI today. Do read and share. Press release: FTX Group has established accrual as its claim against all official documents filed with a US bankruptcy court. FTX is the opposite of Bitcoin. Bitcoin protocol was created precisely to prevent Ponzi scheme, bank runs, enrons, WorldCoin, Barney Madoff, and Sam Bankman-Fried bailouts and the whole reassignment. Some understand it and some not yet. We are still early. Bukil was the man behind Bitcoin ticket down to $16,600 mainstream adoption in El Salvador. Despite the backlash the presley received to the purchasing Bitcoin as market crashed, Bukele cited the recent FTX collapse to explain why Bitcoin is different. FTX is the opposite of the Bitcoin, said President Bukele while explaining the inner workings of the Bitcoin protocol. The Bitcoin white paper highlights the importance of an immutable peer-to-peer network in achievable or trustless financial system. In the last, I'm going to be talking about the last tweet about their operations. Just in, Sam Bankman-Fried crashed out $300 million from a FTX fundraise in the 2021, which was supposed to help expand the business while still general. That's it for today. If you haven't already, subscribe the Bitcoin Thinking channel and turning on the red notification button. And also comment down below my new gloss.